opportunities that we will see to try to be in front of you and talk to you about what we're doing at Freddie Mac on the stacker side and the ACES side. So with that, let's move on to the next slide. In 2023, this was a very, important year for us as a 10-year anniversary. But what we issued on the new issue front, it was only 2.8 billion. Compared to the year before, that was about a quarter of the issuance from 13 billion in 2022. So it was a small number of bonds that we issued, mostly at the top of the stack. We didn't issue much down on the Bs. At the beginning of the year, we issued a couple of B1s, but after that, we stopped issuing B1s. We've been more in a mode of trying to look at our really capital restoration phase, which means that we're trying to spend less money and build our equity within the firm. We have over 40 billion of equity now from nearly nothing a few years back. We cover over 85 billion of single family mortgages to credit protection on the stacker notes. And we still had a very good year looking at the type of investors that are participating in the space. We had close to 100 investors, just one shy of that. We had new investors coming into the space, even in a year with a small amount of issuance. And we also were able to recapture about 17 investors that came in back after not participating throughout 2022. An important part of what we did in 2023 was also our tender buyback program. We did 4 tender transactions, buying 3.6 billion of tenders. These allowed investors to reinvest some of that money, provided liquidity to the space. And I think it was critical also as spreads moved tighter throughout the year. And once we're looking at spreads even today, we're very close to the tights of the early 2022. So at the beginning of 2022, our M1 was about 100 basis points. Now we're talking about the low 100s. So we're getting close to that, somewhere about 25 to 35 basis points wider of that, but we were as wide as close to 300 on that M1 class. And also this year we issued the first A1 class under the stacker program. This was something that was initially brought in through the ACES program. So ACES came in, did this first. They were very successful in that, and we copied on the stacker side, and we were also very successful. We had over 30 investors on that first deal on that A1 class. So again, 5 deals throughout the year, 2 low LTV, 3 high LTV, and 4 stacker tenders. So it was still a very busy year for us, but less than 2022. So with that, I'm gonna pass it along to Jeff to talk a little bit about the same 2023 activity under ACES.
Thank you, Christian. Appreciate it. And wanted to welcome everyone. Thanks for joining the webcast. Wanted to also mention we had last week a big conference for reinsurers here in DC. Had an opportunity to catch up with many of our ACES participants. It was great to see everyone. As you can see, I need to update my picture at the beginning of this. This is what happens over 10 years of a reinsurance program. There's a little bit of gray in there, not because of you all. Okay, this is good. A lot of work to go around for 10 years. But I wanted to thank you for your support. It really has been a great run for these last 10 years. And we've got a very robust platform. We can have years where we transfer 8 billion worth of mortgage credit to reinsurers. We know that. And we can have years where we introduce new features. And so last year, it was a smaller year for us, 1 billion in new transaction volume. We took the opportunity to introduce 2 new features, the A1 layer and the 20-year term. Both made their way into the product platform. I would say both of those features we would intend to continue to include in our program for the foreseeable future. So the market responded really well to new features. The 20-year term really was introduced in the last few months of the year, last transaction of the year. Quick turnaround time for that. And so we had great participation, even though it was really last few months of the year where we introduced that concept. So both of those features required working with you on the market side, but also internally. The team did a lot of worked with our regulator FHFA to get those new features through. So we would mark those as two big accomplishments for the program for the year. 29 unique participants on the program. It's a very healthy number, very well supported. We had the largest M1 that we've had in program history. We had 19 total, but the largest M1 panel across 4 transactions. And we also added 3 new counterparties for the year. 3 low LTV deals and 1 high LTV deal. So overall, looking back at the year, I think from Freddie Mac's perspective, very successful year to the program. The reason to introduce new features is because we see this as a viable product, a viable tool for capital management going forward. And so we're trying to get as efficient with it as possible. And with your support, we were able to do that. And we anticipate, again, having those 2 new features in, and wanted to thank you for your support in 23. Christian, let me turn it back to you.
Thank you, Jeff. So looking at investor participation, again, we've had a great partnership. And if you look at the bottom of this slide, you can see how we started in 2013 with 76 investors and how the program grew in the investor throughout the years. By 2019, we surpassed 200 investors, and we're very close to the 300 investors as of the 10-year mark. So hopefully this year, another 8 investors, and we'll get to that 300 mark, on the stacker side, on the new issue front. And throughout 2023, we saw, between 40 and 60 investors per deal. Each of these deals was very successful in getting a good number of investors, having insurance, having hedge funds being really the largest part of our investor base on the hedge fund side, money managers as well, good participation of REITs, international investors. So these allow us to continue to get the liquidity. It's important to have dealers that provide that liquidity to the space, but investors are really the end liquidity providers in the space, where we know capital constraints are there for the broker dealers that try to do the best in providing that liquidity, but the investors are the ones that are really putting the large amount of money that allows this product to be very successful. And moving into the next slide, just want to talk a little bit about spreads that I mentioned before. We're getting closer to the tides, and these probably still showing just at issuance spreads. So we look at where we issue deals in 2020, that M1 was below 100 basis points. And then it got to as wide as close to 300 basis points in 2022 DNA 5. But then it's starting to come down. I think that the last deal is showing 185 on that high LTV transaction in 23 HK3. I think right now we're seeing spreads kind of in, like I said, in the low 100s. So we do expect to continue potentially to see that continued reduction in spreads. And like last year, we had a net negative supply year. I think 2023 potentially is similar to that, as we will have pay downs, tenders, and then a new issuance volume that's going to be relatively similar to what we did in 2022. In 2023, I'm sorry, in 2024, as we will cover 2023 collateral. So going to the next slide, talk a little bit about the buyback program under Freddie Mac, which has been, our 4 tenders for 2023. Those were 3.6 billion of bonds that we retired and repurchased. Most of these bonds do not provide any benefit to Freddie Mac, or very little benefit to Freddie Mac. They provide economics that are not, something that we want to continue to put out there outstanding. So we continue to expect to buy bonds throughout this year. We've done 9 tenders total, retire over 10.5 billion of notes, which provided at times significant liquidity to the market when it was needed in 2022 and early 2023. And still today, it does provide opportunity for investors to go and tender those bonds back, and then buy new bonds that are coming to the market and get better spreads from that perspective. We continue to pay like premium over market levels, but we do encourage investors to sell them back to us, when we're going out to the market and trying to tender. We don't expect to be tendering bonds multiple times, as our intention is to be able to get these bonds back at good levels for us as well as the investors to provide that liquidity. So with that, I'm going to pass it on to Jeff, who will, I'm sorry, one more slide that I'll have to cover. This is the EU due diligence requirements. So as part of our ability to provide investors with the tools necessary for them to determine if they can participate as EU investors, we continue to provide additional resources in our website. We've provided additional disclosure on Annex 2 at the beginning of the year. Then we added additional disclosures related to Annex 7 in July of this year. We've provided also mapping and a regional glossary that allows the investors to determine, okay, is the information that Freddie Mac is providing us, is this sufficient for us to determine that we can buy these notes? And as part of the clarification from the EU Commission, we are also providing redacted transaction documents that allow investors to determine what the legal documents will look like for new transactions, and that they can get comfortable in purchasing CRT bonds or stacker notes that meet the EU risk retention requirements. As always, we cannot tell investors that we meet the EU risk retention requirements, but what we try to do is provide you the tools for you to do the analysis, and then you can participate in our transactions. With that, I'm going to pass it along to Jeff to go over information on the program.
Thank you, Christian. So just a little bit about participation in the deals for 2023. Again, 3 low LTV deals, it's SPL, and 1 high LTV deal, the SPH. We began the year at 25 participants on that first deal, 27 on the second, down to 21 and then 14. Again, I would say the comment on the toward the end of the year, high LTV transaction with the 20-year term introduced. There several, some markets that were not able to participate right away, but we would expect them to participate on 20-year terms this year. So we'd expect that number to go back up. But very well supported through the years. We're through the year on the SPL2 deal. That was the first transaction with the A1 where we introduced that. SPL1 still had the old M1 in there. So very well supported if you look at the numbers from SPL1 to SPL2. So by the end of the year, 29 unique participants on deals in 2023. We now are at a point where we're approaching 60 market participants that have ever participated. If you look at the bottom, year by year, good growth year over year. This year, up to 58 unique participants. So there it is, a well-established platform. I think for a new participant, you've got a lot of resources to work with, and a lot of data with available external models to work with to evaluate the risk. So we're very well positioned to onboard new markets, and our numbers do continue to increase. So just to look at our participation levels on the next slide, you'll see we did have some price widening through, if you compare the beginning of the year through to where we arrived at the end of the year on the M1, M2. I think, given volatility in views, I think the macro environment for house prices obviously showed strength. So not that long ago, we had several economic outlooks that would have called for negative house price, and we saw a pretty stable, healthy market. I think the underlying macro environment, as well as the characteristics of the reference pools, are very supportive of mortgage credit. So continue to look for price movements that are reflective of that. Through the year, we did see some widening, but very good economics for the underlying ACES deals all in. On the next slide. So not only are we active, I think we still have the spread slide up. Not only are we active with new deals, we are also very active on the call option front. So ASUS, since the middle of 2016, has had a 5-year call embedded in our transactions, so time-based call. This past year, we had 8 deals that were called. You can see the total of nearly 1.5 billion in outstanding protection was called in 2023. It's a savings for the company. Deals that no longer offer very much benefit given the home price appreciation we've seen since the inception of the deal. So here you've got a mix, mostly 2018 deals that you would see here that have been called. We'd expect, I'll talk a little bit about what we have coming up for this year for call options, but total of 1.5 billion. The team was very busy in that regard. I think we've executed every one of the call options that has come up for deal execution, and 20 deals have been called program to date. All right, on the next slide. So I wanted to take a little opportunity to look at the performance of the deals. We've said this in the past, the performance, given the house price accumulation through the years, the vintages have produced very low loss rates. And here what you see is in dark blue, the credit losses associated with each vintage, and the light blue is the modification related losses, and this is through October of 2023. A lot of this program data is available on the Clarity tool on our website. So one observation you could have here is the amount of mod and deferred payment plan losses that we've seen across the vintages. Mods through COVID proved to be a very effective way of mitigating loss. So we saw a very little transition from delinquency through to actual loss producing events. So I would think going forward, given the success of those programs, the forbearance and the DPP programs that were used successfully during COVID, you would expect to see Freddie leveraging that tool for loss mitigation in the future. Prior to 2021, we had a proxy B3 coupon that was there to help offset some mod-related losses. I would say post halfway through 2021, that was removed. So as an investor reinsurer, that's something to be aware of and track. But again, the losses in the mod, both in the REO FA, the closed loan losses, as well as the mod related losses, well inside the retentions that Freddie Mac has across the vintages. On the next slide, let's take a look a little bit at delinquency transitions. So what this would show you is year over year. Year over year status of the loans from November of 22 through to the end of this past year. So for loans that were current as of November of 22, very small percentage of those became delinquent, so less than a percentage, hardly notable on the radar there. So very good transitions, very good borrower repayment patterns. For loans that were 3 to 5 months delinquent in November of 22, many of them, the vast majority of them, actually had an improvement in their delinquency position. So you had 64% of them cured. So if you look at current and prepaid total in that middle bar, roughly 64, 65% of them cured, and 79% of them, or an additional amount, were in a delinquency status less than the 3 to 5 months that they were in at November of 2022. So good improvement year over year. For the most delinquent population, the D180 pluses, also again pretty healthy performance there. 63% of them cured, and many of them improved in their delinquency status. So we're in a favorable, back to my earlier comment, we're in a favorable credit environment for mortgage credit, and both on the outlook for house prices, and the underlying reference pool credit. We see some very good performance loss on both the loss and the delinquency front. We wanted to show you a little bit of our single family pipeline, so I'm going to turn that over to Christian to go through that.
Thank you, Jeff. As you mentioned, performance has been extremely good, and we've paid, again, significant amount of premiums throughout the years with less than 2 basis points of losses across any of the vintages that Jeff showed on the previous slide. So going into the reason why you're here, probably. Most of you just want to hear what you're going to do in 2024. How much are you going to issue? What are you going to be covering? So this is our pipeline for our 2023 production. So we've been preparing this report on a monthly basis now for around a year, over a year. And you can go and about the 15th of the next month, you'll be able to see the January fundings as well for 2024. But what you have here is what we could potentially use to do CRT. So that's our LTV 61 to 80 loans, are the 81 to 97, really 20 plus years term production. So about 200 billion of eligible CRT collateral, which means that we expect to issue between 4 and 6 billion from both Stacker and ACES. That's very similar to what we did last year. I guess it's just around 4 billion what we did in 2023. 2024 is slightly bigger. Why is that? Since 2023 was a smaller production year. Well, in 2023, when we were issuing CRT, we were covering 2022 production, but we had previously almost covered about 40% of that 2022 production when we were issuing 2021. We were trying to reduce our pipeline. We got as close as, on the ACES side, I would say they did some forward, so they were close pretty much on time. As we were getting a deal done, it was really covering the collateral that we were bringing in the previous month, and sometimes even a collateral that we had not yet originated. On the Stacker side, we were close to about 3 to 4 months, and we were on the process to be able to do almost on time, so post-deal due diligence. But with our strategy to focus on capital restoration, we've the kind of pipeline is now about 12 months or so. So we're going to be covering 2023 production. The ability for us to move a little bit from Stacker to ACES, that's always there based on market conditions and levels spreads that we have. We usually target around 70-30, but we have the ability to adjust as needed based on our view of the markets and market ability to take that. So we go into the next slide, where I'll cover a little bit of the Stacker program engagements that we plan for this year. We'll continue to do these webinars or webcasts where we will have either executives or other people from Freddie Mac talk about what we're doing as a master servicer, what we're doing on the origination side, servicing side, technology side, so that we keep you investors aware of what are the developments under Freddie Mac. Then we'll expect to see you at different conferences and events like the SF Vegas or the IMN, the New York City conference that's been every year around May, and then ABS is in Miami in October. Also, we continue to meet with you, roadshows or visits to your offices to make sure that we're in front of you, understand your needs, your thoughts, and how you're seeing CRT in the program. And here's what you probably wanted to see is what are we going to be issuing this year? We expect to be 1 to 2 times every quarter on the new issue front, and have 3 to 4 tenders. So with that, I'm going to pass it along to Jeff to go over the ACES program.
Thank you. So we have throughout the year, we'll look for opportunities to meet. I think a good way to kick off the year this past week at the GC conference that we've got listed here. So just several industry conferences that we're aware of. And then I think most importantly, the in-person meetings and roadshows. We'd like to have host events here at Freddie. We'd also intend to be out on the road. We've been getting more active in that regard. Since COVID, we finally this past year got on the road, and we're able to do some international trips once again. So I would expect more of that. And if you, as a participant, would like to have an in-person meeting, just let us know. Just reach out. Very willing to do that. The expectation for the year in terms of transactions, we've got at the bottom. So every quarter you'll see something from us. So we've got either a couple deals or single deal here listed, and then in addition we've got the 12 early call options. So it'll be a busy year, but looking forward to it. I think we've got some really good momentum coming into this year, especially around the innovations that we've made. The industry has proven to be creative and very supportive. So I wanted to thank everyone for that. I know for both Christian and myself, it's great to have such good support and very active interactions throughout the year. So with that, why don't we bring it in for a landing? I think we'll move over to take some questions, see if there's any questions that have come through. And again, thanks for attending.
Yes, and we do have one question that has come through. The question is from Rodrigo. In 2024, do you see a continuation of stacker structures with new A1 class?
Yeah, thank you, Cindy, and thank you, Rodrigo. Yeah, we plan to issue the A1 going forward. That was very successful. Again, in the HQ3 transaction, we had over 30 investors, and we think that this is a class that will continue to allow us to better manage our cost and manage us better to the ERCF capital rules. So if you're not familiar with that class plays pro rata for the first 36 months. And then after that, it pretty much becomes like a bullet bond, month 37 or 38. It will pay down, and it will have less variability as it relates to prepayments compared to the other classes in the waterfall.
Okay, great. Thank you. We haven't gotten any other questions. We'll wait another moment. If anyone has any questions, please feel free to put them in the Q&A box. We will see. Let me see. Okay. Coming up. Do you intend to start issuing B2s again?
At this point, we do not expect to be a programmatic issuer of B2s.
Okay, thank you. Okay, it looks like that was all the questions that we received. So, Christian, if you'd like to send us off.
Sure. I think, with Jeff, we want to thank you again for the partnership. We value this time. We value taking time to listen to us today. And we look forward to seeing you throughout the year. Again, it's been a great 10 years. And we look forward to the next time working together with all of you.